Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show I have Robby Rydinski. Robby is a seasoned professional in the real estate and financial services industry, specializing in new construction, fix and flip projects, development, and rental financing for experienced real estate investors. With a career spanning over a decade, Robby has established himself as a prominent figure in the business purpose lending sector, consistently delivering exceptional results, reliable communication, and aiming to exceed expectations. Robby, welcome to the show.
Yes, sir. Thanks for having me.
I always like to start off at the top of the show by asking folks how they got into the real estate space.
Well, I actually got into FinTech first. I got into a company called Lending Club, which is peer-to-peer lending for unsecuritized. It was unsecuritized credit card consolidation debt. They were kind of the first to have, people on the street investing in loans that they could get a return on. And then it was just a big marketplace for financial technology exchanges. So I really wanted to get into that because I studied finance in college. So I did that. We got to see that company go from, again, all on one floor in San Francisco to IPO. So we got to see a financial technology go to scale. And I just loved that. I couldn't get enough of that. I went into more of that was operations when I was over there. And then I got more into sales and doing that. And one of my buddies actually got a job at a lending home at the time. It's now Kiavi. But I got a job over there and fell in love with real estate lending and just the operators that we got to work with, the brokers that we got to work with, help scale their business. There's a lot of intricacies. The first 12 months of lending money to real estate investors was a very big learning process for me. But after that, it keeps compounding into new stuff, new opportunities, new way to structure deals, having that big macro insight of what these investors are doing to help them originate the loans. I couldn't get enough of that. So financial technology was really, really what got me into where I got to at Lending Home Kiavi, because they use the technology and software and website to streamline hard money lending. And now I'm over at a company called Anchor Loans, just doing big loans and running a big team over here. And it's been great.
It seems like you're the Swiss Army knife of building great teams.
Yeah. I'd like to think so. I've been a hustler the first 8 years of my career. And now I've kind of transitioned into like a CEO role. And I've learned I'm really good at it. My team is really good. They have all the same attributes that I have had that have led me to be successful in my career. The communication, the problem solving. It's more than just a originating a loan. It really is. It's just, if you can have that extra level of detail and understanding, you'll provide that insight to your customers, and they'll have a great experience, and it just snowballs, you know?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Let's talk about that level of detail. So Anchor, is it fix and flip loans?
Yeah, it's fix and flip. It's construction, heavy construction. That's really what we're best at. We do development stuff, bridge loans. So the guys that really are buying lots, they're splitting lots. They want to go ground up on all those, making a little development. Even the big ones, we have a division of our company now, Anchor Home Builder. So we're lending $50 million development deals over there. But bread and butter is definitely the single asset fix and flip and ground up construction. We can do portfolios in that too. That's kind of what we're the best at.
There's a lot of people in this space, the lending space. There's a lot of options, and right now with everything that's at people's fingertips,
Right.
people can go across state lines, and now they have a national entity, right? And so I could be borrowing from someone based out of New York and vice versa. And with so many options, you mentioned detail, right? Why Anchor Loans?
Yeah, I mean, it's saturated. This is a very saturated industry from when I got into it 10 years ago. Even when I got into it 10 years ago, when starting at Kiavi Lending Home, it was a lot of learning to understand how to do this better. Now everyone has a pretty good baseline level of like, we can all do this really good. And it's all about the service and being there with rates and leverage. If you're too far outside of that, this is a bottom line business. It really is. You have to be close because everyone's trying to save money on their investments. They borrow money as a necessity to scale. And if they're doing it 15 at a time, that adds up quite heavily. Those are the ones that we are really good at servicing. So Anchor's a good lender partner. Helps service multiple loans, even when it gets to the servicing stage of, hey, we're past maturity. There's a lot of lenders that really don't have the flexibility to extend it more than once or even extend it for a low fee, right? You're a product of whatever the machine can support. We have a lot of different capital outlets to where we're able to extend loans easily. We're really good at construction, like I said, so our draws are very seamless and it caters to the real estate investor. Anchor's been around for a long time, 25 years, so it's not like we haven't originated a loan and understand and formulated our program and process to support a lender partnership rather than a loan originator, if that makes sense.
Can we go granular here for a sec?
Yeah, let's do it.
So you talked about extending a loan, right? And when I think about
Right.
fix and flip, I think about there's deadlines, people have things that come up, there may be more issues, right? Or, the home's not selling, right? There's all these factors that come into play. I haven't
Correct.
done a fix and flip myself, but I participated as a literal worker on a
Yeah,
fix and flip, right? Just to see kind of, okay, this is how you take out subfloor. This is what a bad foundation looks like.
right,
These are the things that you have to, come across. Here's wiring issues, so on and so forth. And so
right.
when you talk about extending, is this these kinds of issues like the property sitting in the
Correct.
market or it's more in repairs than we initially thought?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors. and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Correct. Yeah, I mean, think about it at scale, right? I've alluded to this multiple times of like we want to be a good lender partner. We are a really good lender partner for the scaling real estate investor. And the amount of reps, the amount of properties that the scaling real estate investors take down, there's going to be some losers in there. That's just a part of real estate investing. You can't anticipate every single one of them is going to be the best. There's going to be tenants in them. There's going to be the foundation issues, like you said. There's going to be the ones that just sit on the market, right? Like they missed on their numbers. They missed on their comps. It just happens. That's part of it. So when you get to your 12 months, you have to extend the loan. These are short-term, interest-only bridge loans that are the fix and flip. The construction ones are a little bit longer, 18 months, and we can get up to 24. But you can't anticipate unforeseen issues that arise with real estate investing. Just people in general, some break-ins, some fires. You just don't know. And having the flexibility on the back end to be like, all right, look, we're just gonna increase your rate 1%, no fees, right? That's kind of what we like to do to help them finish. There are a lot of other lenders in the space that don't have that flexibility. They're like, look, our loan docs say this is a 1% fee for 3 months. This is a 2% fee for 6 months, right? And they're like, well, wait, I paid half a point to originate the loan on the front end, and you're going to charge me 2 points on the back end to extend this 6 months. We're talking big loans here. Like if we're talking $1 million loans, that's a big chunk just to get, 3 to 6 months extension, right?
Yep.
And that eats into the profit again. And it's not a matter of like the lenders that they're trying to be, shitty to the investor. That's not what they're trying to do. They're just, the machine that they've built supports doing 12 months or 18 months and not extending past that multiple times. So it's not a fault of anyone other than the way that the entire organization is built to support scaling real estate investors. And no one wants to do that. No one wants to continue to extend loans. It's not what, and the investor doesn't want to either, right? But there is the reality when reality hits that 12-month mark and it's like 1 point, 2 points, 3 points to get it extended, when we're like, look, we're just going to add 1% to the rate. You're going from a 9% rate to a 10% rate. Your monthly payment's going to go up a little bit. You need to get out of the deal. That's a pretty big deal, right?
Yeah. That's
It's something you don't think about, right? You're originating a loan today and you're like, shit, 12 months down the line, I'm running into a big problem. And it's on 3 properties. And those 3 properties are ruining all my profits for the rest. And when it comes to tacking on more fees and more stress and more headache, like it's easy to get lured in by, the half a point, 8% rate, 9% rate, or whatever it is, 100% financing. That's the easy part to get lured in. But if you think about holistically, I need to scale my business with someone who understands the business, number one, and 2, who can like think about potential issues. And like I said, I've been doing this for 10 years. So I've seen the cycles of guys doing 20 a month with me. And then all of a sudden they're getting screwed on the back end due to problem properties, problem tenants, problem with extensions.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Robby, let's pivot a bit here and talk about driving growth and organizational growth. And you became a part of Anchor. You mentioned not when they were just created, but you've helped expand them to the role that you are in today. And then
Yeah,
at your
yeah, yeah.
previous
V2 of Anchor.
your previous company, you saw them go from where they were at to an IPO. Now, as someone who's an operator in the space, oftentimes we don't take a step back and reflect on the things that we're doing well. But in talking with you, it's clear that there's some leadership acumen. It's clear that there may be some intangibles. If you were to give someone else advice for someone stepping into a role that maybe you stepped into in any of these organizations, is there any key takeaways that you would tell people that really help spur the
Yeah.
success?
Are you referring more to like as an originator stepping into like getting into the space and lending money to real estate investors? Are you talking about the operator specifically, about them going out and trying to tackle real estate investing
As an
as their
origin,
business?
as an originator.
As an originator, I mean, it's very hard in the beginning to say no, if it doesn't work, if it doesn't fit. If you are understanding like the capabilities of your lender that supports your business, and you're trying to fit deals that don't fit that, and you're spinning your wheels on that, you just got to learn to say no a lot of the times. And that's really hard as someone starting,
Yeah.
because a bird in the hand is better than two in the bush, right? That old saying. But at the same time, that bird in the hand is going to cost you 4 days when you could have been hitting people and just being very intentional with your approach, saying, look, we're really good at single asset fix and flip and ground up construction. If you have those type of deals, let's talk. Let's look at them, and let's try. If I'm not right on price, let me compete for that. That's what you need to do. Figure out your avatar, your client, your target, and stick with that. Don't try to get too far off. And you can say, look, if you're doing developments, we don't do that. You should try Visio. You should try Lima. You should try Genesis. You should try someone else in the space. But we can't do that really well. Next time you got a fix and flip or a ground up, hit me up and let's look at those.
Robbie, when you were building Anchor in the earlier days to where it is today, and you're of course seeing the landscape change now drastically with everything that we have at our fingertips now versus then, and it was a lot then too.
Yeah.
Was there a set criteria that you would have that has changed over time when evaluating deals and when evaluating people that we're looking for fix and flip loans?
Yeah, are you talking more about like early days at Lending Home Kiavi, or like right when I got to Anchor in the last 12 months?
Right when you got to Anchor.
So, yeah, it's the same approach, honestly. Like I was rebuilding a book of business, and I just needed to be the same type of intentional and figure out what Anchor does really well, and try to mold my and pivot my approach to investors in that sense. Like we're really good at ground up construction and luxury fix and flips, like doing big ones in LA, or any of the other big metros
It's a niche.
around the United States. Yeah, we're really good at the luxury stuff, and people don't like other lenders don't love
They
playing in
don't.
that 3 to 10 million. Like we just increased our max individual deal size to 20 million, so that can support those crazy luxury builds. And that's where I've kind of pivoted my business and my pitch and my approach, um, to like, again, just do what we're good at. That's what it's about. That's what you got to do as an originator. Not try to make everything work. Figure out what works really well and what the company wants to support, and go after it. Just get after that target audience.
To take a look at all the things that you have the ability to do and maybe the capacity to do on some level. And you mentioned like luxury fix and flips, right? That right there, I'm like, there's a niche, because
Right.
I'm in
It's a niche,
selling,
right?
and
Yeah.
I can't name a luxury lender for
Yeah. Who's
$5
doing that?
million.
No one.
No
No
one,
one's
right?
doing that.
And so it's like when I have someone, let's say out here, who say, "Hey, Dylan, do you know anybody who does luxury fix and flip lending?" I can say, "Well, yeah, actually I do."
Yeah. Yeah.
Right? And so
Yeah.
it's tempting. It's very tempting to say, hey, well, we're going to do a little bit. You mentioned development, right? It's tempting to say, we're going to lend in multiple different avenues and to multiple different avatars
Yeah,
versus saying, hey, this is what we're going to laser focus in on. And beyond that, I actually think that's applicable to real estate operators as a whole, whether
it
you're
is.
on the lending side or if you're like me and you're a wholesaler and a realtor. Yeah, I'm tempted all the time to be like, hey, let me get a fix and flip for myself. And lately I've been saying, hey, I'm a good wholesaler and I'm a new realtor. Let me focus on these two things.
Yeah, it's very tempting to dabble in everything, but being the master of none isn't really how people are successful. They focus on what they're really good at. And like I said, when I was at Kiavi, we were really good and they still are very good at the fix and flips. The smaller deal size fix and flips, crush those. Absolutely crush those. So I've pivoted my whole team to target fix and flips that are luxury fix and flips. Like we have a lot of people on Instagram that we've helped out that post, right? These guys and these agents post on Instagram just saying, hey, showcase new property, $12 million property in Arizona and in Southern California and New York, right? And they're like, look at how badass this was. And just saying, hey, how's the access to capital on these? They're like, dude, they had to do these cash. No one wanted to do
Whoa.
these. And like, look, next time hit us up on one of these. This is what we're really good at. So that's kind of my V2 of what Robby has done for the last 10 years has been a lot of the fix and flip stuff, doing it high volume, 500 million a year, 1,200 loans a year, doing a lot of volume in that, but getting more into the bigger deal sizes and the luxury stuff because that's what the lenders that I work for and that I'm the managing director for now supports, and that's kind of where we want to hang our hat. That's what you think of when you think of anchor loans, is the big deal sizes and the luxury flips.
Is Anchor coast to coast?
Yeah, yeah. There's only two states we're not in. I think it's Vermont and I think it's South Dakota is
Okay.
the other one. So we're nationwide. We're in Hawaii. We're everywhere.
So I'm in Dallas, Texas, right? And I think we like to think, at least, we like to think that we're one of the hotbeds for real estate, single family. I
Yeah.
spent 5 years in San Antonio. San Antonio is great too, don't get me wrong, but I think DFW specifically, there's definitely like, it's a hotbed for single family investing. As someone who is a lender, I'm curious to get your perspective on what you see to be the hottest, you know, markets in the country for single family fix and flipping and for these types of deals.
Yeah, I mean, there's been a lot of like honestly in like North Carolina in that Charlotte area and all around there has been super, like Virginia Beach, like Virginia, like there's a lot over there on the East Coast, kind of in not they're not like the super high dollar cities, but they're not super low, right? It's not like Ohio where this is like a 20K purchase and a 40K rehab. We're still talking 100 to 200K acquisitions for 50 to 70K renos and exits. Like they're good exits around there. People are making money in those areas. I'd say there's still pockets, really good pockets of Florida that people are making good money on. It's very just it's not state specific, honestly. It's like it's city specific. There's
It's
certain cities that are booming, and the locals. I'm not an expert in the entire nationwide landscape of what cities are the best, but if you look in each state, there are hot cities in that state that are not as well known, like the outskirts of Charlotte, like right here, Memphis, Tennessee, instead of Nashville, Tennessee, like
right.
got a lot of good operators in Memphis that are absolutely crushing. They're selling to the blue collar folks, right? They need jobs. Those jobs support blue collar income. They sell to exit those ones very easily. It's just that's the other thing. Like, is your target if you're targeting volume and you need a quick exit, you want to have like a marketable home. You don't really want it to sit for 3 to 6 months just to get your price. It just eats into your profits.
Yeah, I mean, more than ever, I've heard this that if you're gonna buy distressed real estate and fix and flip it. I can definitely speak for where I'm at in DFW. You better buy it right. You better buy it right.
Yeah, I mean, you make all the money on your buy. I know you're a wholesaler by trade, but some of the bigger investors that I work with have an acquisitions team that source seller direct. They do the mailers, they do direct marketing,
Yep.
cold calling, all that type of stuff, so they can get that discount on the front end and have their crews who they have their own crews, right? They don't really hire subs. Their subs just are very dedicated to them. They'll make money on the front end and they'll make money on the back end by saving on costs that, you and I flipped a few homes myself, but I definitely don't have a competitive advantage with my contractor network or my sub network. These guys definitely do. So those are the guys that are really successful. And you can make money in any city if you figure out your math equation. This is a straight math equation of sourcing properties and not getting emotional about what price you're paying for what. Does this fit my 65% ARV LTV purchase price model? Like, everyone has their own thing. Real estate investors need to have a calculator on their desktop or on their phone or whatever to just be like, this works. Boom, let's do it. The big guys do that. They don't even look at the properties. I'm sure you have some really big customers that you work with that buy a lot of deals off of you that are like, as long as the numbers pencil, I'm in. I'll be able to handle whatever it is.
100%. It's amazing how much people are working off of a Zoom phone or Zoom calls and a couple pictures and here's my offer.
Yeah. Yeah.
And that's how I met a lot of people. I've made huge connections that way. That's actually literally how I got onto this podcast, because I had a deal in Azle, Texas, which is west of Dallas. I'm living in San
Nice.
Antonio. I'm on Investor Lift at the time. I send it to someone who owns a bunch of property out there. He didn't
Yeah.
end up buying that
It
property,
works.
but he said, we became friends after that, and he referred me to the owner of this podcast, and that's how I'm sitting here. It's like crazy how these connections come about.
How you
But
do it.
Robby, we are coming up on time over here. Where can folks go to get a hold of you?
Yeah, I actually am I'm building my social presence right now. I got the handle on Instagram is the Hard Money Plug. It's just THE Hard Money PLUG. You'll find my face on there, Robby Rydinski. I got the website too. I got a personal landing page, anchorloans.com. Let's double check the backslash. I think it's just my name. Yeah, anchorloans.com/originators/Robby Rydinski. And that's ROBBY-RYDINSKI. Yeah, hit me up. Especially if you're in the luxury fix and flip space, ground up construction space. Definitely got you handled on fix and flips too. We're lender partners. We're not loan originators. I'm not a loan originator. I'm a seasoned vet in the industry who definitely can give you insight to navigate the gray areas of getting through real estate transactions and financing these transactions. It gets sticky sometimes.
No question. Robby, thank you so much for coming on the show here today.
Yes, sir. Thanks, Dylan. I appreciate you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.